Hey guys, uh, guys, let me know if you can hear me. What's going on? Hey Chidi. Okay, perfect. Sorry guys, just checking that. Never mind, that's not working. All right, there we go. So we are live. Who's in right now? Let me just have a quick look. Let's get. Is it signed out? Um, You can hear me fine. Okay, fantastic. Thanks, Rich. Fantastic. Lovely. Okay. We are now live, just going to look at gold. So, to be fair, my day is done, but opportunities that we could look for. Oh, one second, let me just. Right. Okay, so things we're going to take into account on gold right now is if we start at the higher time frame. Now, what do we know? We came into daily structure yesterday. We popped above it like we had done previously, where we've seen a nice big wick the following day, and then it's reversed. Again, we popped above it. We popped above it, we reversed. Again, we've popped above it. Question is, will we hold or are we going to continue to move higher? So, although the leading up to yesterday, my bias was long gold. Now I'd rather sit on the sidelines or look for shorts, okay? Unless we have a deeper retracement. So I'm happy to trade back up into this area. As you see, you have strong candles. Next candle usually takes out the high and then reverses. Strong close. Next candle takes out the high and then reverses. So maybe we're going to see if we pop above, we take out the high and then reverse, or we're just going to get sit here. We don't know, right? Okay, so predominantly the market has been moving higher. Look on the 4 hour. What do we notice? We can see the market's come down. Potentially 4 hour support is being formed. Now, the reason I say potentially is because this 4 hour candle is still live and could reverse. So on that basis, we need to look at the lower time frames, and this is where our trade came in earlier in the members group. So you can see initially what we were looking for is price to come into this support level and form a bullish candle, which it did on the hourly. Now, if you want to take the hourly candle, fantastic. You've got an up range candle formed. Next candle's wick down. You can buy the break of the high and trade it into resistance. So what what would that look like? We can see that if we'd have come in here and traded it back up to the next resistance level, 30 pips, easy takings, easy money. Okay. Wouldn't want to look at any longs above here purely because the noise. If we just highlight this area here, that's just noise. We don't see any clear traffic. We don't see clear space to trade into. Now, potentially we could see an opportunity to get short from here. Um, we've got comics opening it in 27 minutes. So things we can consider and we can look at. Right. If you want to be a little bit more aggressive, we could wait for a 15-minute bearish candle close. Ideally, I'd want to see at least a downrange candle. So when we refer to things like downrange or uprange, we're referring to this. So if that's one candle, and that's obviously, I'm incorporating that this has the wicks as well. So let's just, so there's no confusion. So let's say that's a candle. Forgive, I don't think I can get it any more central. Yeah, I can't get it central. Sorry, guys. I just have to make the candle body a bit fat. There we go. So if that's our candle, right? An uprange candle would look like this. So an uprange candle would look like that, meaning it has a higher high and a higher low. Okay, so these are things that I will constantly reiterate to members or in the free training. A downrange candle would look, in fact, let's do it with this one. A downrange candle would look like this. It has a lower high and a lower low in relation to the previous candle. So what does that show us? It shows us where the market has potentially turned. Now, if you were to look at certain trading terminology, it'll be referred to as it wouldn't be referred to as a fractal. A fractal just means that it has a lower high. But if we're looking at for lower high and lower low, downrange candles. So effectively, you're seeing a shift in sentiment. You're seeing a shift from buyers to sellers or sellers to buyers because now the market has confirmed a turn. Now, the lower the time frame, the weaker the signal. The higher the time frame, the stronger the signal. So what do we bear in mind with that is where do these happen? So let's say we're looking at a daily chart that's producing higher highs, higher lows, and we're wanting to trade with that trend. Then we see, let's say, minor structure formed. So let's say hourly swings where we can see that the market's pulled back to. In essence, this is where we want to see the lower time frames finding buyers to come back into the market or sellers to come back into the market. So if we look at what's happened recently, we know this is daily resistance. Why? Because we've already marked it on the chart, and this is the importance of marking things on the chart. So we marked daily resistance on, market sold off, it's come back up, no real opportunities through here. Again, we could have watched for opportunities through sells through here yesterday as the structure, because let me just put in a new level here. Now, you've obviously got to remember time of the day that you're going to look for sells. So we want to do it when there's cash coming into the market. So here we're looking for the market to close below. Why would we want to do that? Because look at all this free candle space to trade into. There's no noise there, no noise whatsoever. So again, same sort of scenario. We can look here. We've got structure that the market has come back into, potentially forming a downrange candle. If this candle forms as a downrange candle with a bearish close, let's have a look at it on the 15. Okay, does it look as good on the 15 as it does on the 30? You tell me. Hey, Paolo. Hey, Dan. Hey, Jody. Hey, Rich. Hey, Chitty. Does it look as good on the 15 as it did on the 30? This should be a real quick answer. It should be a yes or a no. What do you think, guys? Yeah, exactly. 30 looks much better. So I would avoid this at all costs, right? And if that means you miss a trade, you miss a trade. So be it. Now, 30 looks so clean. We can see nice big candle bodies, body getting us. Yeah, 30 looks good. So if I was going to take a trade here, regardless of what the lower time frame's looking, I'm going to wait for this, even if it means I miss a trade. So what? Yeah, so we need to wait for this candle to close. If you wait for this candle to close, we have a simple set of rules. Okay, so the best way to think about the process for entering a trade, the best times and where we're looking for a wick up and a wick down would be, let's say, through London session. The only time where I'm not so bothered about in this instance, if I got a downrange candle and it's not closed all the way down here, if it closes down here, then there's no trade. But if it closes here and we have a little wick to work with on this candle, around 1 o'clock to 1:30, I'm happy to take a momentum trade because this is where we're getting comics out is pre-comics open, so we're expecting a flood of cash to come into the market. We've got US traders coming into the market, so that's where I'm expecting to see that little surge in pressure as new cash comes into the market. So I'm happy to trade without a wick up here. If it's the London session, I want to see a wick up before I sell. And if you think about the process, if you fire an elastic band or you fire a gun, what do you have to wait for? So if you fire a gun, you have to cock the hammer. Okay? You have to cock the hammer, and then as it pulls back, the hammer goes forward, it hits the bullet, and it projects. If you want to shoot an elastic band forward, you have to pull it back, let go for it to go forward. So trading, if you think of candles, is very, very similar. Okay, the pullback is the market getting liquidity. And how does it get liquidity? It sells off to attract buyers. It comes to a cheaper price. As it comes to a cheaper price, it attracts buyers. For a seller, it needs to go up so that sellers can be attracted to the market by selling at a higher price than the current market price. So that's all it is. So you want the market to go up, but rather than selling it at a higher price, you want to know as the market goes up, does it actually attract sellers? And the best way of identifying that is, let's say we get a downrange candle. So we've got a downrange candle. We've confirmed this here. So let's say this is what we're seeing formed, which is also known in this instance, if you're a candle fanatic, evening star, right? But we've got our evening star. Next candle pushes up. Now, we wait for it to come back below this low before we enter. And the thought process and the rationale behind that is that by it going up, we don't know if it's attracted sellers yet. We don't know if sellers are interested at this price. So it could just keep going up and keep going up and keep going up and keep going up. And then when it gets above here, what do we know what's happened? If we then saw price go above this high, what's happened? Sorry guys, just need to okay, here comes the sell. So be it. I mean, for me, it doesn't matter because, like I said, I'm not. Hey Anna, how you doing? I'm not placing any more trades today. But realistically, we need to see. Yeah, buyers are back. If it goes above here, guys, look, resistance has formed, it's pulled back down, and then it's created a new high. Yeah, change of momentum. Yeah, so that's what the whole point of looking at structure with candles is so that you can see the change of momentum or you can see where buyers and sellers are interested. Because essentially, resistance is just a buyer candle followed by a seller candle, and support is a seller candle followed by a buyer candle. Because what we've seen is that buyers have come back in, they've held price at that support level or at that price, they've come back in. What confirms it is then if we get an uprange candle or an outside candle. Why is it either one of those candles? Why would let's move this over here. Oops. Uh, Let me just delete one of these. So either we're going to see and oh, it's not what I wanted to do. Never mind. Either we're going to see, oh, god damn it. Put that back. All right, delete. Either we're going to see an uprange candle like this one here. Let me get rid of this. So either we're going to see an uprange or we're going to see something like an outside. Now, what is it that's important about either one of those? If we're looking to buy, why do we need to see an uprange or an outside candle? What has it done? that the other two definitions of candles don't do. So remember, there's four types of candle. Okay, four types of, oh God, four types of candle. Name them. Exactly, Jody. Exactly. So name the four types of candle. If you keep things simple, guys, trading will be simple. The hardest thing about trading is keeping it simple. Once we identify what's happening, then it's about taking action. So right, if you can hear me, guys, if you've seen what I've just written, guys, write down the four types of candle. So if you write them down, they become more clear. Rather than just saying it, just write them down. Up range, down range, inside, and engulfing. Yeah, but why not keep it simple? If you say engulfing, if you have inside and outside, they're the same thing, but at least then your language is the same. Up range, down range, inside, outside. They are the same thing, Anna, so you're absolutely right, but just in terms of uh, keeping it simple for your brain. So up range, down range, inside, outside. Easy. Yeah, no, they're the same thing. Don't be sorry, but it's just a better way for you to remember. So, guys, if you're new to the channel and you're not sure what I'm talking about, a market or a candle cannot do anything. No, I mean, look, it's come off at the level we wanted to trade, but this is the all right. Let's get rid of all drawings. So now, let's have a quick look. Uh, so look, in principle, you could have had. There's no trade now, guys, whatsoever. Markets come right off the level that we're interested in. But look, if you want, if there are some aggressive traders in here, look, because the 15 looks messy, I wouldn't have traded it and didn't trade it. But that's what we're looking for. If this was nice clear candles, in theory, we've got the beautiful, you see momentum, you see bigger bodies, then you see smaller bodies and wicks, then you see the market reverse and roll over. Simple tennis ball analysis. Now, look, just because of that, and you're thinking, oh, it's going to roll over, doesn't mean just trade it because look, this is a bit noisy. This is why I wanted to see the 30-minute close. I wanted to see the 30-minute close bearish. And I personally wouldn't want to trade from here into this support area. Um, there's still room, but I'd rather wait until we get underneath. Well, let's have a look. What room do we have underneath here? 33 points. So again, depends how the market closes. It's a little bit, but if you can get an early enough entry, there's options. So let's just write down what we've got available. 35 pips. So 35 pip range. And then underneath here, 873. So that's what we're effectively looking at. Now, again, if we get another strong move down here, guys, what do you think we can look at? We've got options. we have options, and options are what we want as traders. We don't want to just be fixated on a trade to in one direction. We want to be able to have both possibilities. So let's say the market comes back down into this area. What could we look for? Hey guys, if you're new, welcome to the live stream. I try and run 2 or 3 of these a week on YouTube now, especially coming through to the new year. This is a free channel. We run 6 other live streams for our members throughout the course of the week on Zoom that aren't published on YouTube. That's during the London Open and the NY Close. So swing traders for the NY Close and London Open for gold and DAX predominantly. I would like to say it's a very simple process that we use, looking at basically just the 4 different types of candles and then looking for clear structure. So the 4 different types of candles I've mentioned, but I'll mention it again because you will never see anything as simple as this. So let's move it like this. So there's the 4 different candles we can have, guys, and that people can make it as complicated as they like. So, hey Frankie, so if this is candle 1, oops, candle 2 can be, oh, am I pressing the wrong button? Yeah, it's not happening. Come on. There we go. So there's 1. Are you gonna, what's happening? There we go. There's 1. There's 2. I'll give over. There's 3. And last but not least is 4. Okay, so look, what do you notice about this? This is the only 4 things that can happen with candles, right? We have what we call an up range. We have a down range, an inside, and an outside. So that's it. The market can't do anything different other than those 4 options. So look, let's just write it down. So up range, down range, inside, oh, not quite, inside, and the last one, outside. Now, like I said, it's not rocket science, but the market can't do anything different than those 4 options. So that means up range has a higher high and a higher low than the previous candle. Down range has a lower high and a lower low. Inside has a lower high and a higher low, and outside has a higher high and a lower low. So that's it. It can't do anything different other than that. Okay, so if we know that they're the 4 different options, then we have to decide which one we want to see and where we want to see it. So let's think about what they show. So an up range shows that the market has respected the previous candle's low and it's broken the previous candle's high. So realistically, where would we want to start seeing an up range candle? What type of trend and what would we want to see prior to that? Have a think, guys. Where would we want to see an up range candle formed? And what would the trend look like? And where would the best place to see it be? Okay, breakout above resistance, good answer. On a support area, okay, there you go. Anna and Dan, perfect. Frankie, perfect. So you've got all three different areas where you want to see it, right? Because a breakout, you're going to need to see an up range, you're going to need to see momentum. It has to break out of resistance. A support area, well, when this has happened, a support area has been formed. And Dan, as you've said, a break and retest of structure. So the market's broken out, it's pulled back, and then it continuation. So they're the three times that you want to see it. So now you know exactly the three different strategies that I run. A breakout, a BPC, yeah? And then obviously the third one, we all know what that is. So breakout, then we have a BPC. Last one, you can use it, but you'd need to see a downrange candle after it, which is your false breakout. So you've got breakout, false break, BPC. And then we have a continuation trade, which is what we call the flip. So within there, you know exactly what you're looking for. Does that make sense, guys? Yeah, so the flip is the fourth one, but a flip, if you're looking for trend, you've now highlighted everything that we need to know. So we're looking for an up range candle. Yeah, don't swear. Looking for an up range candle in either of those three different areas that you've identified. The next thing then we need to do is what, yeah, keep, would you say it's simple, guys? Is this like simple analysis that, yeah, if you're finding it simple and things to look at, just because we're not placing a trade doesn't mean this isn't valuable, right? Right? You want to make things as simple as possible. The simpler you break it down in your mind, the simpler it's going to be when you come to trade. We as humans, we love to overcomplicate things. So all we need to do is unwind the complications and make it as simple as possible. So now we've got an idea of where our setups are going to be and what they're going to look like. What do we need to do before we execute the trade? So let's think. We've now decided that we want to be a buyer because the higher time. This is hypothetically speaking. Hypothetically speaking, we're saying we want to be a buyer because the higher time frame trend, 4 hour, daily, whatever, is in an uptrend. Now we've seen a correction on the hourly or the 30-minute. It's formed support because we've seen a seller candle. Now we've seen a buyer candle, and that buyer candle could be an uprange candle or it could be an outside candle. So it's now a bullish candle and it's broken the previous candle's high. So we've got our setup. What do we need to now think of before we go, right, let's just buy this market because we've got a support level being formed. The higher time frame trend is up. Now we've got an uprange candle. What do we do? Do we just go ahead and place it, or is there something else we need to check before we go ahead and place it? Any ideas, guys? No, we've already waited for the pullback, Frank. We've had our uprange candle formed, so we've got the pullback. So what do we need to do? Okay, wick down. Yeah, good answer. But before we even think about the wick down, before we think of the wick down, because if you get the wick down, next thing you're going to do is put a buy stop at the candle high. Okay, but we haven't checked something yet. Ah, it's all right, Frankie. Yeah, so buy stop at the candle high makes sense if we've had a wick down. But if we're thinking about a wick down, you're automatically going to place the buy stop above the wick down high. Okay, so we need to do something else before we wait for the wick down. No, we've had the bullish close with the uprange candle. What are we thinking, guys? Why do I mark these price points on? And why do I put this here? Yes, Paolo. Yes, Paolo. Look left. Look left. Your head should be stuck like this. Look left. Always look left. You want to see clear candle space. Okay, so yeah, Dan, great answer. So if the candle, let's say you can still leave your order in for that candle, even if it breaks the candle low, but only for that candle on the basis that an outside candle is formed. So it might go down, spike through the lows, so you wouldn't have been triggered, but then comes up and breaks the highs. So that's only time, right? But if it doesn't trigger, if it breaks the lows and then closes bearish, you cancel the order, you wait for the next uprange candle to form. So today is a bit of an educational session, I'm guessing, as opposed to, let's get rid of these. So we know we've got a 35 pip range down here. So if we get a nice close down here, close below, potentially we could look for sells. What else could we look for, let's say, in this area? Potentially. Not yet, but potentially. Love it. Love it, Frankie. Yes, exactly, Simon. Yes, Paolo. Could potentially look for what we had here previously, where I sent you the screen grab, where you wait for a candle close, bullish candle close, especially if it's up range. Next candle to wick down, buy the break of the high, trade it up to the level. Now, obviously, if this one, we have to see strong candles to the downside. If you have a bearish candle, then a bullish candle, and then a bearish candle, and a bullish candle, and then a bearish candle that taps, all this is just going to be noise. So then we just stay out of it. We stay out of it. So keep everything super, super, super simple. How many of you are trading funded accounts, guys? So if you fancy a funded account that has no challenges, just and a static drawdown, so that's a big, big pro if you want to pass your funded accounts. If you're looking for one of those, check out it's an fxcapital.com. We are affiliated with them, so have a look, check it out. Very, very simple. It's also a live, because it's a live account, you actually have to go through KYC and AML checks. It's not like you're just logging into one of these other funded accounts where you're buying a demo account. You're depositing into a live account. You've gone through the AML KYC checks. You've got a live account, and then they effectively shift it into what's called a multiplier account, an incubator account. Um, Payouts at the end of every month once you've hit your milestones. It's all explained on that website. It's really, really simple. Um, no hidden agendas. So if you are in the ring for a funded account, have a check, see what you think. Um, can all be set up. It's obviously not as quick as your usual demo accounts from your typical funded accounts, and that's because they don't need any credentials from you. You don't need to pass verification. You don't need to prove who you are. Okay, so that's the difference. What we're looking for. So market's continuing to move lower, but like I said, I wouldn't do anything just yet. If you get a nice solid candle here on the 30 and it comes in, next candle, if we can take out the lows and then we see a bullish candle, I think we could see a nice little pop to the upside. Nasdaq's moving. Let's have a look. Well, looks like they're getting ready for Trump coming in. Markets are on the move again. Yeah, that just popped at 1 o'clock. No real, no real setup for me. Wouldn't have been able to get anything there, guys. As much as it looks fantastic, DAX did something similar this morning. Um, no, we were looking for buys above here. No wick down, no entry. Uh, I've been asked a couple of times today, would I have looked at this inside candle here and then to buy above the high of the wick? Look, hindsight's a wonderful thing. It's not in my rule book to do that, um, especially for the DAX. Inside candles do generally mean a continuation of market movement unless it's at structure. Okay, so it will generally mean that, but I'm not going to take a punt on a 15-minute candle that we've had an inside candle. So yeah, on that basis, it's not something I would have taken, guys. Hindsight, it's a wonderful thing. Go, yeah, I would have put a buy above here, and boom, off we go. There's been no flip opportunities either. There's been no wick down, so no flip opportunities, just kept going. What you do have for potential is if this market has a false break here and then pops and closes below this consolidation, you might be able to find a little bit of a correction move. But I think what I'd be more inclined to do rather than looking for the corrective move is let price break down, then find buyers, wait for an uprange candle, and then trade it back long again. So keep everything super, super disciplined today, guys. Don't want to finish the week on a bad note. Okay, you want to stay super, super disciplined. Uh, start the finish the week on a high and come into next week feeling on top of the world. Right, anyone got any questions? Any charts you want to look at? Uh, let's, let's have a look. Anyone watching anything? See, I don't like, definitely don't like the lower time frames on gold. I think if you're looking at gold, there is potential if we can get a stronger move down into 2700 even handle to look for a little bit of a retracement to go long again. But above 2715, we have some clear candle space up to 2722. So you get a nice 70-point range there to trade into, should we not get a setup down here. But you're definitely going to have to watch the 30-minute and above. Doesn't look like it'll play out too. Oh, you still got 21 minutes actually, to be fair, so not too bad. Uh, do we have any new followers in today? Or is it all members? Is there anyone new to the stream today? Let's just have a quick look. Has there been? Let's see. See if there's been any. Canada securities, US December housing starts up. Uh, ECB, if we lower interest rate too fast, service inflation could rise. Is it up? Dollar remains steady. UK retail sales disappoint. Um, okay, kickstart the North American session with weekly update on interest rate expectations. Uh, so nothing really. It just looks like the markets are being optimistic. I'm guessing with Trump coming in on Monday. Uh, yeah, nothing. Yeah, no, absolutely nothing really to take into account that's moving the market. Uh, bu- 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 So any sort of normal day, I won't look at the charts after sort of 3 o'clock. Um, morning, yeah. So in the morning, any time from 6 a.m. to sort of like 8 a.m. I then have sort out my little one for school run, and then I will have a quick look from sort of like 9:30. I'll stay in and around the market. Usually got some sort of sessions with clients, um, and then I'll be start being proactive from around 12 o'clock. So just try and keep the early session for London, for gold and the DAX. Now the DAX is new to me, guys. It's not something that when I say it's new to me, it's something new that I started looking at. Why don't you like gold on lower time frame? Just because it's not very clear, David. Look at the candles. They're very, very wicky. If it's over here, fine. Where you get these nice big candles and small wicks. Here, this starts looking nice where you could think, right, the market's going to roll over because you see the wicks getting a bit bigger to the upside, the downside, the body's getting smaller. Then it just pops down, consolidates, and goes again. So anywhere underneath there, I would look to sell because you've got a nice clear candle range. But generally, I'm not a massive fan of the lower time frames just because it gets a bit wicky, small bodies. Um, um, oh, in fact, actually, David, seeing you on here, it's just made me think. Um, were you looking at the mentoring? Because we've got a couple of spaces, and I do know obviously that there is a price change at the end of this month. So I don't know if you've spoken with Jody yet, but if that's something you're interested in, it might be worth having a chat with Jody um, before the before inflation kicks in and trade and train, unfortunately. Do make me laugh. I was Inflation's happening everywhere, everywhere. I was speaking with the Facebook representative earlier, and basically the cost of marketing and adverts and system with them has gone up 400%, the way their system works. So my little inflationary. Oh, okay, fantastic, David, fantastic. Yeah, my little inflationary increase is nothing. Um, right. So look, yeah, the main thing is whenever you're thinking, so I know people always ask me about candles and why do I not like certain things. I will trade. I generally won't go down to 5 minute unless. So here's a question for you guys. Those of you that watch me trade the news, why do you think I'm happy to go to a 5 minute candle around the news, but not under normal times? I'll allow for the 20-second YouTube delay. So why do you think I will drop to a 5 minute candle or 5 minute time frame around the news as opposed to any other time? What do you think happens? Okay, increased volatility. So what do you think that means? No, Frank, you know after I trade the news, I'm looking at the 5 minute candles, but I don't look at them anywhere else. I'm trying to give you the answer without giving you the answer. I can't really say much more unless I give you the answer. Mm, okay, so look, what did I say about this here for the 15 minute, but then you look at the 15 minute everywhere else? Yeah, Jody, the lower time frames are usually very noisy. So we need a catalyst to get it out of that noise and to see some directional moves. So I want to see big candles, big bodies. I want to see momentum. I want something that I can trade or that I can fade. Well, trade in the direction or fade against it. And that will come down to structures and the type of news that came out. Does that make sense, guys? So we're always looking at the context of the market, and then we shift the way that we'll look based on what's happening. So if we've got CPI data, we know that the market's going to move like a rocket. So on that basis, if we're waiting for the 30 minute or the 1 hour, it's gone, it's done, it's finished. But what I'm looking for is that first move. It moves, and then it'll either break the highs or it'll stay inside the range. It'll come to a price point, and let's say it's major hot inflation. We're going to expect, let's say, strong dollar, weeks, weak indexes. So then I'm like, right, okay, if that's the case, I want to be looking at gold shorts. I want to say, right, gold moves lower. Next 5 minute candle that pushes higher, I'm going to sell the lows. If I wait 30 minutes, it's probably moved $30 or $25. I'm not going to get a trade. And if I do, the probability of it being success is a lot more, it's like a law of diminishing averages because the further it goes, the less likely it is a probability. Yeah, so that's what we're waiting for all the time. We've got to make sure we concentrate and just trade according to what the market permits us. You know, look at they're what we're looking for. These kind of moves. And if you go to the 30, you can see that the noise gets wiped out a little bit. It smooths out those wicks, smooths out some of the bodies. Still doesn't make it 100%, which is why whenever you're trading, you just want to trade whatever you see. And if something doesn't look clear, don't trade it. But you'll generally find that you'll be able to find a trade, usually in and around market opens. So that will be London Open, US Open. London Open, you can trade the DAX, you can trade gold, it'll move. US Open, you can trade gold and trade the Nasdaq. I don't like to trade the Nasdaq through the London Open, which is why I've started looking at the DAX. And um, the DAX is a very, very similar price point to the Nasdaq, so I don't have to change rules. So if we look at volatility and how much it moves, so if you look at the Nasdaq, it's 21,300. If you look at the DAX, it's 20,800. So there's like a 500-point difference. In the grand scheme of things, it's peanuts. It's like a quarter of a percent. So I tried to find something that I can model, something that I already trade, and therefore that's why the DAX came to me. I've been looking at the DAX. We've been trading it now for about a week live. Been watching it for a number of weeks, um, and so far we've had a couple of trades and it's paying dividends. But dog snoring. Any questions, guys? Right, let's have a look. All right, so look, let's say we've got our area here of interest. Now, I know and you know that the Nasdaq can move 300, 400, 500 points in a day. Let's say this candle, this hourly candle, in the next 9 minutes manages to close above this price point here of 21,420. Would you want to take a breakout if it closes above? Would you want to take a... Yeah, exactly. Not for me. It's moved too much. I'd want... No, if it did it there, it's done 216 points in a 1 hour candle. I wouldn't want to do it. So what I'd wait for is price to form resistance on a lower time frame and then find support on a lower time frame. Then we look to trade it. So I'd much rather wait. So let's have a look. Now, resistance might get formed here on the M15. We don't know. If it does and it pulls back, then you get support formed. All we're waiting for is uprange candle and then we go again. So just visualize what it'd look like. So let's say, uh, Come on. So, so this is in theory what we're looking for. Price to pull back, creating downrange candles, downrange candle, first uprange candle, then you're waiting for a wick down. Wick down, buy the break of the high. Right, any questions? Yep. Okay, so now you know what you want to look for. Now you know the process. Do we have clear candle space? Do we have an uprange candle? Do we have a wick down? Right. Now the next thing is the clear space. Do we have 20 pips? Do we have 40 pips? Do we have 60 pips? What do we have? So if we're trading the Nasdaq, we're looking for 20 and 40 points as T1s, T2s. If we can get that, fantastic. Stops to break even, get risk free. Initial entry will be above this candle. Stop loss will be below the low. The wick down, as it breaks the highs, move our stops underneath the lows. Simple, guys. Nothing. Keep it really, really, really simple. Right. Any questions, guys? Let's have a look. Gold looks like it's dropping a little bit. Now, I'm uh, I'm not going to be trading anything else, so I'm sitting tight for now. We'll come back on Monday, see what damage we can do next week. Uh, before we close off today, just let me know how your week's been, guys. Has it been a good week? How many trades have you taken? How many winners? What win rate? How many pips have you banked? What kind of thing? What's our target for next week? Thanks, Anna. Take care, darling. Have a great weekend. We'll see you Monday. What's your thoughts on gold M15? What's your thoughts on what you have just explained? Thanks, Mark. Great session. Got to shoot. I've already deferred Sainsbury's by 24 hours. Don't think I can. I lost most of my recent profits, traded at point 0.5 instead of. Simon. Easy mistake, but this is something that is easily correctable. So that's just rushing, mate. That's just rushing. Yeah, you've effectively just done 10 trades in one there. 75% win rate this week. Lovely, Peter Cole. That's what we're looking for. we're looking for a minimum of around 68 to 70% win rate, and on good weeks we want to be in and around the high 70s, early 80s. Um, what's my thoughts on gold M15, and what's your thoughts on what you just explained? Um, I think I think your it should be what are your thoughts on what I just explained? I'm obviously going to be very biased on what I explained. It makes total sense to me, and um, just look at the chart. Tell me what you see. Do you see clear space? Do you see a trading opportunity? Do t you have to, if you're asking a question, it has to be about something that you're highlighting on a chart. You can't ask me what I think of my own education. I I am my own worst critic at times, but I would like to think that you guys will pull me up on things if it didn't make sense, or at least try and reiterate it. And then if it doesn't make sense when you say it back, then we can have a look at what's been said. You uh, just share your chart in the group, Frankie. It's always better because someone might have the same question. So I prefer it when members share their charts and questions in the group because I end up with 200 private messages and I end up missing some. So, okay, guys, on that note, that on that note, I'm gonna head off now. There's nothing for me to do. Enjoy your weekend, everyone. Have a great weekend. And if there is anyone else that is interested in trading, wants to have a look at a few freebies, get them on the YouTube, share it with them, and we'll. I'd love to see more people in here and engaging with us. All right, guys, take care. Have a wonderful weekend, and I'll see you next week. Cheers, Rich. Take care. Cheers, Paolo. Thanks, Anna. Thanks, Frankie. Cheers, Dan, Simon. Oh, thanks for throwing in the likes, guys. Much appreciated. Take care. Bye. See you, Chidi. Take care.